we'll go ahead and get started. I'm sure people will come in as we get going. My name is Dakota Moore. I'm with the Kentucky Horticulture Council. I'm the grower outreach coordinator. So right now I'm doing a lot of work on crop insurance, our small fruits initiative, and doing some ag water testing as well. So for our workshop, we're going to go through some crop insurance options, policies and programs that work for specialty crop growers better than some other policies. And then we'll talk about record keeping for crop insurance in mind. And we'll go through a crop insurance application example and then a record keeping workbook that I've provided to everyone. So why should you consider crop insurance? Well, some people might need it for terms in a loan. They might need it to protect their investment in their farm. A lot of growers, that's their main source of income, or that's how their families are fed. So you want to protect your investments and your income. So what crop insurance options are best for specialty crop growers? We'll start talking about the multi-peril crop insurance, also known as Npci. If you hear me say Npci, that's what I'm talking about. We'll talk about whole farm revenue protection. That's the plan that's probably what a lot of specialty crop growers will end up going with. And then we'll talk about some programs from the Farm Service Agency, the Non-Insured Crop Disaster Assistance Program, or NAP, the Tree Assistance Program, also known as TAP, and then the Rainfall Index. So how do you get coverage for crop insurance? The first step is to find an agent. Then you need to ask the right questions, and you need to have your records ready. So finding an agent, there's several ways you can. Probably the most common way for farmers and growers to find an agent is to talk to fellow farmers and growers. Word of mouth is huge in agriculture. We get our seed recommendations from our neighbors. We get free marketing from our friends and our customers. So ask around and see if anyone you know has purchased crop insurance, and they might know a good crop insurance agent, or they might tell you stay away from that one. He wasn't very helpful. And then there's also the USDA Risk Management Agency, or RMA. They have an online agent locator tool. This tool will give you a list of every crop insurance agent that's licensed in Kentucky. And it's a very big list because you don't have to be a resident of Kentucky to be licensed in the state. So that can be a good thing and a bad thing. I know we like people that are local, people that you might know or know someone that knows them, but there may not be an agent nearby that is familiar with your crop or has insured your crop before. So the best thing to do is just maybe find someone out of state that's licensed in Kentucky, covers your county, and they may have better experience with what you're trying to protect. And so when should you start? You should start, if you're serious about getting crop insurance, right away. Question?
Okay, if someone has a farm that's in like 2 counties or one county, do they get one policy all it or policy by county?
It depends. The question was, we are zooming this, so I'm going to repeat your question. The question was, if you're growing in more than one county, do you need one policy or multiple policies? And that's answer depends on what policy you end up going with. Some are for every field you've got in the whole US. Some are, you have to have one for each county. And we'll talk about that as we go through the plans. So when should you start thinking of, or start the crop insurance process? You should find an agent as soon as possible, because depending on your crop, you may have a different deadline. For the multi-peril crop insurance and the whole farm revenue protection, most of those, the deadline is March 15th. if you're a normal tax filer, if you file at odd times, it may be a little different. For the FSA programs, we'll talk about that deadline varies by program and by crop. And I've got some of those, I know a date for sure, and then others, it may depend on several factors. So the takeaway is don't wait, find an agent as soon as possible. And if you don't have crop insurance for 2022, some plans you can still get that policy ready to insure your crop this year. So first we'll talk about the multi-peril crop insurance, or the Npci.
Before you do that, for her question, would that determine how FSA identifies your farm? If you had the two locations under one farm number?
That for the FSA programs, you may just need one policy, but for some it will be different. But usually, even so with the multi-peril we'll talk about right now, it's by county. No matter if you've got the same farm number, all that, it doesn't matter, it's by county. So it really just depends on what policy you really go with, whether you'd have one policy or not, depending on which counties you're growing in. So the multi-peril crop insurance is probably best for growers with a single commodity, something that's really large acreage of, or maybe two that they're growing a large acreage of. The Npci is subsidized by the USDA RMA, or Risk Management Agency. They make the multi-peril crop insurance policies, they write all these policies, and that's why it's by county. They write a policy for one specific crop in one county in the whole US. And these policies protect against loss due to natural perils, living threats, and losses in revenue. Broken down, here's some of those threats more specifically. The weather events include things like hurricanes, tornadoes, blizzards, floods, drought, too much moisture, lack of moisture, even some hard freezes might be covered as well. You're also protected against fire, and that's naturally started fire, probably by lightning. Man-caused fire is not protected under this. And then I did include volcanic eruption. That is something that may not affect us here in Kentucky, but with that comes smog. If there's ever enough volcanic ash and smog in the air that it affects your crops, you would be covered for that as well. The living threats are insects and disease, but this is only if you used proper control measures and they still weren't enough. So maybe it was a large plague of locusts or something along that lines. Your integrated pest management wasn't enough. So that's why it's good to keep records, because you need to prove I did spray for this, I did apply these dates, to prove that you're trying to at least protect against insects and disease. And then some of the other things you're protected against with the Npci are a failure of water supply for irrigation, prevented planting, maybe caused by too much rain, or some other weather event, and then losses in revenue due to price change. So with the Npci, if you're growing a crop with a volatile price, this might be something for you to look at. Question?
So that would also include light freezes?
I'm not sure. The question was if it included a light freeze. I'm not sure. It might depend on the crop. They probably have, maybe these few crops are more susceptible. So that would really be something you would talk with your agent. So Npci coverage varies by crop and by county. And so it's based on demand, and it must be requested by enough growers. Because they do write an individual policy per crop, per county, it takes a lot of man hours to create this. So they're not going to write a policy to protect banana trees in Callaway County, Kentucky, because there's probably not anyone growing that. If there is, it's probably not enough. So if you find that your crop isn't covered in your county, you can request to the RMA for coverage through an Npci policy. And then maybe after a few years, or if enough people have requested it in that county, you may get coverage. And so if you grow more than one crop, you will need separate policies for each crop because it is based on crop and county. They use your actual production history, or APH, which is an average of your past yields, and then a price that the RMA determines to determine how much you would receive in a payment. So that's why it's important to keep your records of your yields, because they need a minimum of 4 years and a maximum of 10 years. And then these plans are available from 50% to 85% coverage. So if you picked 75% coverage, if your yield dropped below 75%, you would be able to apply for a payment or an indemnity to receive some money because you did have that decreased yield. And there are a few crops that currently have coverage in Kentucky under the Npci. This is specialty crops. Row crops like corn, soybean, tobacco, those are probably have a plan in every county, but some of these specialty crops, not enough people have requested them. But I've got a list of some things that are probably covered in at least one Kentucky county. If not, enough people haven't requested it. So some of the vegetables that do have Npci policies in the US are cabbage, cucumbers, sweet corn, onions, peppers, potatoes, pumpkins, sweet potatoes, and tomatoes. And then the fruit are apples, apricots, blueberries, caneberries, cherries, figs, grapes, peaches, pears, and strawberries. And then there are some nuts that are also covered: almonds, macadamias, pecans, pistachios, and walnuts. So you would need to speak with an agent, and they would be able to tell you if you've got coverage in your county for your crop, if you're growing one of these crops. And there is an Npci option for organic crops. There's about 80 certified organic crops, but this again varies by county and crop. And with the organic crops, you can go by a yield-based or a revenue-based coverage. And these crops can be insured at contract price value instead of the average market price or whatever price the RMA sets. So if you've got one or two contracts with big buyers, you can insure for that price instead of using maybe a price that's lower. And then this is also available for certified and transition crops. So if you're in transition and you're worried, I'm not using, the IPM I was used to, I might be opening myself up to more pests or diseases. While you're in that transition period, you can get the price for the organic crops. Were there any questions about the Npci before we move on?
What was the acronym for? Sorry.
Sure, Multiparel crop insurance. Let me hand you the printouts.
Thank you so much.
Okay, so our next type is whole farm revenue protection. And this is for diversified farmers and specialty crop growers especially, because this does include value-added products. So whole farm revenue protection, this puts everything on your farm under one policy. This can include fruit, vegetables, meat, dairy, value-added products. So if you make jams from your strawberries or your raspberries. And it also can include some post-harvest, post-harvest handling. So if you wash vegetables or produce for other growers, or maybe you've got a kiln and you do some drying. That can be included under the whole farm revenue. And this isn't available in every county in every state. So if you don't have an Npci policy available, you can do the whole farm no matter where you are. And this will combine counties. So if you're growing in multiple counties, you would only have one policy with the whole farm revenue. But how the Npci provided protection against yield, the whole farm provides protection against a loss in revenue. So individual commodities are not as important as your whole revenue. So maybe if you had a great year in peppers, but a really poor year in pumpkins, if your revenue was offset, you might not receive an indemnity or a payment for that loss in pumpkins. I mean, you can grab the 2 flyers and a thumb drive. Real quick, before we move into more on the whole farm, I want to talk about a new policy for 2022. And so this is still a part of the whole farm revenue, but this is for micro farms. So this is for diversified farms with revenue under $100,000. So a lot of specialty crop growers that are growing maybe 10, 15 crops that they're all selling at the farmer's market or direct to consumer through farm stands. If their revenue is under $100,000, this is a more focused policy for them. And it is new. They just announced it at the beginning of December. So this, we don't have a whole lot of information on it yet. I'm sure a crop insurance agent would have more information readily available if this is something you think would fit you. So like I said, it's specially designed for direct marketing farms, less than $100,000 in sales, and a sales record by crop is not required. So if you do have 10 plus crops, you don't have to keep a record of my tomatoes brought me this much, my peppers brought me this much. It's just your total. For this policy, you need 3 years of consecutive tax records to prove that you're under that $100,000 revenue. But this includes revenue from all commodities. So you can include your value-added products in any of your post-production operations like washing or drying.
A new or beginning farmer that does not have a record or history of production, are they able to engage in these under special circumstances?
Yeah, so the question was about new and beginning farmers with maybe 1 or less than 1 years of records. There are some exceptions they can make for some of crop insurance policies and programs. That is something you would have to work with a crop insurance agent to determine if you would be able to make those exceptions. This microfarm policy, however, does not include any commodity already insured by another policy, any vertically integrated operations, and then gift or souvenir sales from farm stands. So if you've got, farm t-shirts, or maybe you also sell bread from another, a producer nearby, those types of things would not be included in this revenue. So if that brings you under the $100,000 limit, you could still apply for it. Once you
Something like a corn maze or things like that. Or
I'm not sure if this would include agritourism or not. This is a very new program, so I'm not sure the specifics on that. And then with this policy, like the overall whole farm revenue protection, there is a discount for diversified operations and more availability to higher coverage levels, and we'll talk about that in a minute. So now we're moving back to the overall whole farm revenue protection. So this does include the micro farm policies. There's up to 85% of your approved revenue is covered, depending on which policy you purchase. And the federal government does subsidize these premiums. And I've got an example coming up about that to show you actually how little growers actually pay for this. And like I said, for diversified farmers, if you've got at least 3 commodities, so strawberries, raspberries, and sweet corn, you have access to the 80 and 85% coverage levels. You do have to have 3 commodities at least to have the access to those coverage levels. So this is a premium example for a farm that's about $97,000. So let's look at the 75% coverage level. So I've got $97,000 revenue in my farm, and I've selected the 75% coverage level. If my revenue for the next year drops below $73,200, then I can receive a payment. If I had chosen the 85% coverage level, if my revenue of $97,000 dropped below $82,000, then I could receive a payment. I could make a claim. So going back to the 75% coverage level, the premium for that policy is $6,800, but the government subsidizes a good portion of that. So all I would end up paying would be $1,300 to insure at least $73,000 level. So really, if you had $97,000 in revenue and you chose the 85%, you would be paying $4,500 to insure your revenue. So that subsidy really opens up a lot more options for growers. So what the causes of loss for whole farm revenue protection? These are adverse weather. So anything that's unusually hot, cold, wet, dry, too much wind, hail, we know storms, tornadoes, blizzards, like the multi-peril crop insurance. There's some natural causes like earthquakes, volcanoes, insect infestation due to unusual weather. Maybe we had a really wet spring, so disease is rampant. You would have protection against that. So anything that's kind of caused by unusual weather may also be covered. And then also a loss of a market or a price. So say your farmer's market that you sell to, you sell 80% of your yield to the farmer's market at the farmer's market. Maybe that closes. That could be considered a loss of a market. Some things that are ineligible would be a failure to follow good farming practices, neglect or mismanagement, weeds, chemical drift, animal damage. So those are things that you can prevent yourself. If you let it slip by, then you're not going to receive a payment for that because you didn't put in the labor. And then also, if someone else causes some damage, like they do donuts in your field, or someone throws a cigarette out into your field and you lose some crops due to that, that's not covered.
How do you prevent chemical drift if it's from somebody else other than your own operation?
So
especially this dicamba.
So the question was about preventing chemical drift. So there's things like
a problem already.
a buffer zone. That's probably more looking at like organic crops. If you've got organic crops and then you have some drift, you would need to think about a buffer zone, planting trees or something. Yeah, I'm not sure.
Come back on the one though that applied the chemical.
How do you prove it if they're within 3 miles? There's 10 different applicants. I've already been through this.
Yeah, I'm not sure how to stop it, but that's something they don't allow you to insure against.
Okay.
So let's say you have a loss. How do you file a claim for whole farm revenue? Like the Npci, you would report it to your crop insurance agent. They've been approved by the USDA Risk Management Agency to sell you these plans, and then they are the ones that have to record the damage and help you file a claim. So you have to report a loss in revenue or damage within 72 hours of discovery. So you may not know exactly how much you're going to lose, but if you've noticed a lot of damage to your crops, that's what you need to report right then. Question?
Say you had poultry and it looks like avian flu may be a little thing this year. And they come in and say, okay, we're killing all the chickens in this area because they're being tested and there's some that's been found have it. Would that fall under that? You're required to destroy your animals because of a health mandate.
So the question was specifically about chickens, if there's a health mandate that requires the chickens to be euthanized, or maybe if you've, this could also apply to fruit and vegetables, if there's like a quarantine or for some reason. I'm not sure on the specifics. There are some plans I know for animals that maybe might deal with that or might protect against that. I'm not sure specifically because I don't have a background in animals. But that's something that an agent would be able to tell you for sure, especially if they've got growers that will be affected by, or producers that will be affected by something like that. They would be watching out for that to get in touch with you or help you figure out what to do. And then so you've reported the loss within 72 hours of discovery. And then once you know once you've got your taxes done at the end of the year, you know how much you actually lost in revenue because of that. That's when you file the claim. And so it must be done within 60 days of filing your taxes. And the agent will work with you to fill out that claim. They will have the report that you made about the damage and the loss, and that will all go to the government so you can receive the indemnity. And these are usually paid after the end of the calendar year. Any questions about the whole farm revenue before we move on to some farm service agency programs? No questions? Okay. Let's see. So the farm service agency programs we'll talk about are the TAP, or the NAP, TAP, and the Rainfall Index. So NAP is the Non-Insured Crop Disaster Assistance Program. And this is like the multi-peril crop insurance, it's for individual crops. The NAP is administered by the FSA, and it's financial assistance to growers of any crop with no available crop insurance. So if there's a multi-peril crop insurance policy for your crop in your county, you would not be able to apply for this. This is only if there's no other way to insure or protect against loss. And this protects against losses caused by damaging weather, natural events, and problems that arise from those events. So this is a disaster assistance program, so it doesn't protect against changes in price or loss of a market. And the weather events and natural events are the same as the ones we've talked about before with the other plans. So why should you choose the NAP program? It's great for smaller farms and limited resource growers. And I'll talk about the limited resource growers specifically when we get to the premiums. So you can use the NAP on some crops while having crop insurance on other crops. So maybe you do have a multi-peril crop insurance policy for your tomatoes in your county. So you would have to use that plan, but maybe you're also growing peppers, and maybe there's not a policy for peppers in your county. You can use the NAP program to protect those. And if you were to completely lose your crop, your pepper crop, you lost every bit of it and you weren't able to sell any, you would have at least 27% of that crop value returned to you. So that might not seem like a lot, but that should be enough to replant maybe. So eligibility for the NAP program. It's available to individuals or entities with an average adjusted gross income below $900,000. So this could be, if you've got a company instead, an LLC growing instead of just a single grower, this can be chosen instead. And you must be growing crops for which no crop insurance is available in your state or your county, like the multi-peril crop insurance we talked about. To apply for this, you have to report the name of your crop, the type and variety, the location and acreage of your crop, that you would report after you plant. Then you would also include the date of planting. And the NAP program also needs the intended use of the commodities. So do you plan to sell direct to market? Do you plan to sell to a food distributor? Do you plan to use it for value-added products? Are you going to be selling fresh or frozen? And then they want the post-harvest quantities and the post-harvest quality. So was it marketable? Was it unmarketable? Were you able to sell it for a different intended use? So maybe it wasn't good enough to sell fresh, but you ended up using it for value-added products. That's something they would also like to know. Question?
You're going to use it for multiple things. Do you have to say, I'm going to do 30% direct market, 40% farmers market, 30% to school, schools and other institutions?
Yeah, the question was if the intended use is different for the same crop. Probably, yeah, they'd probably want to know, I plan to sell this much at the farmer's market. I plan to sell this much frozen to a food distributor. And so the eligible crops, these are crops grown for food, livestock consumption, grain or forage, and even fiber. So if you might be growing hemp for hemp fiber, that's something you can protect with the NAP program. The NAP program also includes crops grown in controlled environments. So ornamental plants, cut flowers are new and growing market. Those are something you could insure with the NAP program. And then also mushrooms. Those are also something that's becoming more popular, maybe not here in Kentucky, but that's something that you can use the NAP for. And then also honey, maple sap, sorghum, aquaculture, Christmas trees, and even sod are available under the NAP program. So this is the overview of NAP coverage. So growers select from basic coverage, or there's some for buy-up coverage options. The basic coverage only has a service fee. So all the coverage levels have a service fee, but the basic, that's the only fee you would pay, would be the service fee. The others would have a premium based on which level you select. So with the basic NAP coverage, this protects 50% of your yields at 55% of the price. So your max NAP payment with the basic coverage is 27.5% of your crop value. So that's the least amount you would receive if you had a NAP coverage. The buy-up levels are from 50 to 65 in increments of 5, and all 4 of the buy-up coverage levels are at 100% of the price. So if you chose the 55% buy-up coverage, that's 55% of your yields at 100% of the price. And so your max payment would be 55% of your crop value. And you can also use an organic or a direct market price instead of the average market price. So if you weren't doing organic or you didn't choose the direct market price, it would just be an average market price for your commodity. But you can choose the organic or direct market price if it's available. If there's not one available for your crop, you would have to use the average market price. And with this one, like the multi-peril crop insurance for organic crops, you can use a contract price. and you don't have to be organic to use the contract price for the NAP coverage.
Where does that contract price come from?
That would be, I work with a distributor and I sell them my strawberries. I have a contract to sell them this many bushels of strawberries at this price. And so I work with them to determine that ahead of time before I come to their door with the strawberries. So like I mentioned, a service fee of $325 per crop is the basic NAP coverage level fee. And all the buyout coverage fees, the service fee is $325 per crop, or it's $825 per producer per county, whichever one is lower. So if you were only growing 2 crops that you wanted covered under NAP, you would have 2 policies, and your total service fee would be $650. But if you had 3 commodities, instead of $975, it would be $825. And premiums are calculated based on crop acreage, yield, coverage level, and market price. And so that's why I can't tell you if you've got this many acres of strawberries or of this crop, I wouldn't be able to tell you how much your premium would be. But there is a waiver of the service fee and a 50% premium reduction for beginning farmers, limited resource growers, socially disadvantaged growers, and veteran farmers. So those that are served can receive a waiver of the service fee and a 50% premium reduction. That opens up some of those higher level buy-up coverage for some people that may not have had the money to do that. So here's some of the coverage application dates for the NAP program. Strawberries and ginseng, if you were growing those and wanted them covered for the 2020 growing season, you would have needed to apply by September 1st of last year, of 2021. If you were growing flowers, mushrooms, sod, and Christmas trees, that deadline was September 30th of 2021. Most perennial fruit and nut crops, it was November 20th of last year. And then honey was, the application date was the 31st of December. But if you're growing vegetable crops and annual fruit crops, your application date is March 15th. So there's still time for you to apply for the NAP coverage. So a notice of a loss, in order to receive a payment from the NAP, you have to apply, or you have to fill out a notice of loss and an application for payment within 15 days of whichever of these occurs first. So natural disaster occurrence, final planting date if it was prevented, so you planted a month late because of flooding or something else. Date the damage or loss of the crop was found. So maybe you did have a weather event or a disease occurrence because of a weather event, but you didn't notice it for a while. Once you notice it, you have 15 days to notify them. And then the normal harvest date. Sometimes you may not know that you've had a loss until after you harvest. So whichever one of those comes first, you've got 15 days to notify them. And there are some hand harvested crops and perishable crops that have to be reported within 72 hours. Maybe the loss, they disintegrate so fast or something, you need to have that notified within 72 hours. When you apply for the NAP, the FSA will tell you if your crop falls into that category. Question?
If you have breaking blackberries or things like that, everything appears good and get it, sell it, but it comes back on you that evidently the spotted rust. You know what I'm talking about?
Yeah.
Occurred, and then you have to return the money to people because what they bought was good or looked good.
Okay.
But when we got it home, all of a sudden.
Yeah, so the question was, you've sold your product, but then for whatever reason, you have to refund money. That wouldn't probably not be under crop insurance. That would probably be under your farm liability insurance. So that would not be covered by any of these. Those would be probably farm liability. So any questions on the non-insured crop disaster assistance program? No questions? Okay, so next we'll move on to the tree assistance program. This one is for nursery trees and orchard crops. This one is sort of important right now based on some of the recent weather events we've had. So this is also administered by the FSA, and it's available to nursery tree growers and orchardists. And this is financial assistance to replant trees, bushes, and vines that are lost to natural disaster or plant disease. It can also be financial assistance for rehabilitation. Maybe you didn't completely lose your tree or trees, but you need some money for the rehabilitation process. So what kind of trees are covered by the TAP? Ornamental, fruit, nut, and Christmas trees are covered. And so that can be, you have an orchard that you sell peaches out of, or you are growing peach trees in containers or in ground to then sell the plants instead of the produce. So it doesn't matter which one you're doing. And this does exclude timber trees, though. There are other plans to protect timber trees, but this is for trees that you're selling ornamentally or you're selling the produce. And these trees can be grown on owned or rented land. So if you're growing, I know a lot of nurseries may not own their land, but they're still growing on the land they rent. You can insure those trees. And assistance is available for up to 1,000 acres per grower. So it's a good amount of land. So when do you apply and what damage is covered? With the TAP, this is unlike any of the other policies or programs we'll talk about. You only apply for this after you have damage. So it's not something you need to plan ahead for. I hope no one ever has to apply for this one, because that means you've had a pretty bad natural disaster. But it's something to keep in the back of your mind, or maybe you know someone that was affected by the recent tornadoes we had, and they lost some orchard trees. Maybe they might be able to apply for this. I will say this is only for trees that you're making money off of. So if you lost, you've got 3 apple trees in your backyard, but you don't sell those apples, this would not cover that damage. And you can apply for up to 90 days after the loss or disaster. So if you know someone that did lose their orchard in the recent storms, they still have about 2 months to apply for the TAP program. And then more than 15% mortality loss per stand is required for each natural disaster event or disease occurrence. Question?
Say that you had a farm, do you need to go ahead and have some kind of proof that I did have this many, like a video or pictures showing? So, after the fact, you had high winds or something and damage to trees, that you compare what it was before and what you have now, so that you verify if you're eligible for this.
So the question was, do you need proof about how many plants you had before? I'm not sure specifically. You should have that on record, maybe a list of plants or a field diagram just for your records. But unless they should be able to tell, there was an apple tree here, there was a tree here, hopefully. So I'm not sure about that specifically. So TAP payments are a little different than the others we've talked about. For established growers, they would receive the lesser of 65% of actual replanting cost or 50% of actual rehabilitation cost. So if your trees weren't lost completely and they just need some help rehabilitating, you would receive 50% of the cost of that. For beginning or veteran armed service growers, you would receive either 75% of actual replanting cost or 75% of actual cost of rehabilitation. If maybe your trees were damaged, not lost completely, but they were going to cost more to rehabilitate, they may give you the 65% of actual replanting cost. If that was going to be cheaper, if it's cheaper just to completely replant than rehabilitate, they would determine which one you would receive. So any questions on TAP?
If you paid X dollars for your trees, the replanting is what current market value is for doing those same trees.
I'm not sure how they determine that. The FSA would determine the prices. I'm not sure. It would probably be how much the apple trees would cost to purchase. So our last FSA program is the Rainfall Index. This is for growers with annual forage, apiculture, or pasture, rangeland, and forage. So for specialty crop growers, that would be like honey and hay. If you're growing any of those, this could be for you. The Rainfall Index only covers lack of rain. That's the only insurable cause of loss, lack of rain. Like I mentioned, it's for annual forage, apiculture, pasture, rangeland, and forage, or PRF. So hay and honey. So the Rainfall Index coverage is based on average rainfall for your specific area. It's a 0.25 degree grid in longitude and latitude over your property. And they have, the meteorological data for that area, and that's what they base your rainfall on. You couldn't look at Google Maps and determine that yourself. That's something that they would tell you. And so the Rainfall Index plans are chosen from 11 2-month intervals. So you're only insuring for 2 months. Maybe that's June and July, or July and August, October, November. You get to decide, and you can choose multiple, but each plan is for 2 months. And your coverage levels are from 70 to 90%. And claims can only be made if the final grid index value, the average rainfall for that time, that 2-month period, is less than the coverage levels you selected. So for example, let's say I chose May and June for my interval. This is just for ease of example. Let's say my average rainfall for those 2 months is 10 inches. If I chose 80% coverage, if we got seven inches of rain only, then I could make a claim for payment because we got less than 80% of what I had chosen. But if we got 9 inches, I wouldn't be able to make a claim because I had chosen the 80%. Question?
If you had an alternative water source that you brought in to use, that doesn't matter because it's just looking at rainfall.
Yes, I don't know many forage growers that are irrigating, that large amount, but, with the bees, with the honey, they're going all over. So if what the 5-mile radius that they get pollen from, if those things are underwatered and not flowering or fruiting, that'd be hard to irrigate against. Any questions on the Rainfall Index? It's pretty straightforward. Not many specialty crop growers might be able to apply for it, but the honey, if you're producing a large amount of honey, this might be something to look at.
What is the cost on that?
The cost, it varies. I don't know exact cost of the Rainfall Index policies. It would probably depend. I think it does depend on the months you're choosing as well. So I just have a few reminders for these FSA programs. you would need to contact the FSA to make sure you have all the farm reports and filings you need before you begin the application process. So for all of these programs, you will need a farm serial number from them. You'll need to have a lot of records on file with them before they can work with you to get these programs going. And I recommend calling the FSA office before you go. A lot of them are not allowing visitors inside right now. And it's always best just to call ahead to even set up an appointment, you know, before all this. You know, you don't want to wait in their lobby for hours for them. You want to set up a time to visit.
You say farm serial number, is that the phone number?
Yeah. Mm-hmm. And then there are a few private insurance plans that are available. I'm not going to go into detail. I just like to mention these are from private insurers. So these are not subsidized by any government agency. They're not provided by any government agency. And these are usually just added protection that you can use in conjunction with some other policies or programs. Maybe the policy selected doesn't have hail protection, but that's something you're worried about. There are some private insurance plans for hail. There's also some that are more protection against price changing. Maybe you've got a NAP coverage, but you're also worried about price change or losing a market. That's something you could get through a private insurance company. Man-started fires. So a lot of these government plans aren't protected against, you know, a fire that got out of control, or someone threw a cigarette into your field, or you accidentally lit a match where you shouldn't have. There's some private plans if you're really worried about that. And it's just additional doubling down on some of these policies.
Does that mean that you could have a policy and have the NPCI and be able to draw off both policies? Or it's exclusive?
So the question was, could you have like an NPCI policy and then some of these others? The insurance agent would know if they would conflict, but more than likely, if you were choosing like man-started fire, that's not gonna you know, impact the NPCI plan, so you probably could.
I guess I'm confused about what you mean by the doubling down.
So that's like maybe with the price policy or the price changes, that's one of the things that maybe you are, what you're going to be protected against under your multi-peril policy, that coverage, you think it might, you want a little protection, maybe the higher coverage level for that. So maybe you think the price will change, but the NPCI isn't going to protect you against, unless it's really drastic drop, but you wanted maybe more protection in the price. And then we've got some funding acknowledgements from the Southern Extension Risk Management Education and the USDA National Institute of Food and Agriculture for providing funds for this presentation and the webinar series. Now we'll move into our record keeping. Any questions about the crop insurance before we move on? Okay, everyone should have the crop insurance record keeping workbook I've put together. You can also find it online at the Kentucky Horticulture Council website. And then it's also on the thumb drives I've provided everybody. So you can make multiple copies, or you can print out specific pages.
We can share these with our people.
Yes, yeah, you can share these as well. Okay, let's get started on record keeping. So what's so important about keeping farm records? They're needed for crop insurance policies and tax purposes, and maybe loan requirements. Also, just so you can remember what you did a few years ago. Maybe you forgot where you planted something, maybe your rotation purposes. In most crop insurance policies or programs need at least 5 years of records. So there are options for beginning growers or switching crops or commodity types, but 5 is a good golden year, golden number for years of records. I did mention the switching crops or commodity types. If you're applying for some of these crop insurance policies for a new crop, if you're doing whole farm revenue or some of those policies, they'll want to know what you're switching from, what you're switching to. So every policy or program may require different records. So it's good to just have, a wide range of records, and we'll go through some of the specific ones related to some specialty crops and those policies that affect those. Try to have most of your records together before you begin the crop insurance application process. Otherwise, it'll be a lot of back and forth to the insurance agent's office, a lot of scratching your head about what I did 3 years ago. So an overview of some of the things you might need. You'll need crop names and varieties or types. So that is important. What kind of tomatoes did you grow? How many years did you grow them? Yes. The intended use of the crop. So do you plan to sell it fresh? Do you plan to sell it processed? Will you direct market? Will you sell to a distributor? Are you using organic practices? Are you conventional? Are you in transition to organic? Is your crop irrigated or is it non-irrigated? You'll need planting dates and locations, and that includes counties. So some of these crop insurance policies are county-based, so you'll need to know county. And then, like I said, records for at least 5 years. You do need some tax and IRS information. The Schedule F is something most farms fill out. That's your revenue from your farm. So a lot of these applications pull straight from that. So keep a copy on hand, and you should be able to fill out some of these applications pretty easily with that. So it's used to report taxable income based on or earned from farming and agricultural activities. So anything on your farm goes in your Schedule F. Like I said, it's important for the whole farm revenue protection because that's ensuring your revenue, not your yield, your revenue. So it pulls directly from the Schedule F. And the Schedule F also has some of your expenses as well that you'll need for the application process. And you'll need to know your IRS accounting methods. Some of these policies need to know, are you cash-based or accrual-based? The application deadlines depend on, for some of these, when you file your taxes. So you'll need to know your tax year. Are you calendar filer, early fiscal or late fiscal? And then you'll need to know your fiscal year begin and end dates. So this is an example. It might be hard to see on the PowerPoint or on the screen. It's a little blurry. This is just an example I found of a whole farm revenue protection application. It's asking for things like commodity name, the location of the field, of the planting, beginning inventory, and then what unit of measure you go by. So by plants or by row feet. Then it's looking for, ending location, ending inventory. So you need records from start to finish. It also asks for accounts receivable. So asking your commodity name, who you sold it to, how much you sold it for, and then how much they still owe you. Or have they completely paid you? And then it's asking for accounts payable. So did you buy in a commodity? Did you buy in tomatoes? And then it's asking from who? How much was the beginning dollar amount? And then how much do you still owe them? And then this one is a lot of words, but it's all pulled directly from the Schedule F. So it's asking for all that all that information on your Schedule F. Up here it says for cash basis taxpayers, you use Part 1 of the Schedule F, or if you're accrual taxpayer, you use Part 3. So everyone, oh, I'm sorry, I got ahead of myself. This is asking about your intended revenue. So your expected yield, your expected value, intended quantity, all of that. So how much do you expect to have this year? Then you revise it. So you turn into your crop insurance agent a revised actual quantity, actual total expected revenue later on. And then you finish with your final production and your final revenue. So the crop insurance application, yes, it's due by a certain date, but you are required to follow up with your actual numbers. That way you can get money for a claim if your revenue dropped below a specific number. So everyone should have the workbook. Does everyone have it? So I put together a workbook with some records you should be keeping. So this workbook is not all inclusive, so it may not have everything you need, and it may have some things that you don't need, that don't apply for you. So the first page is crop rotation and input history by field, and this is for 5 years. So it's asking for field, plot, and row name on the left side. Then you put the acres or row feet. And then do you own or do you rent? Because that can determine what your policies you go for, or what programs are available to you. Then for each year, you would have your crop code, your inputs or cover crops, and then conventional, organic, or transition. So this is just a starting point. So maybe some of these don't apply for you, but as long as it gets you recording everything you need, you can change them how you want to. The next page is crop input production details. So this one is for 1 year. So you would need multiple copies for each year, or for consecutive years. On the left side, you have crop name and variety or type. So tomatoes, Jetstar, tomatoes, Rutger, whatever. Production method. So is it in a field? Are you growing in a high tunnel? Are you growing in a greenhouse? All of those things would be important to which policy you select. What's your intended use? Are you going to sell fresh? Are you going to sell processed? Will it be direct marketed? Again, conventional, organic, or transition to organic. Was the crop irrigated or non-irrigated? What were your planting dates for that crop? And then what's the location of the field, row, or high tunnel, just for your record keeping, so you can remember, I planted tomatoes at this location last year, maybe I should rotate to something else this year. And this page, you can have multiple crops because it is for 1 year. The next one is your 5-year estimated and actual income. It goes off your crop income and expenses. So the top few rows are your income. So for each year, you have estimated year and then actual year. So that determines, 2 columns is 1 year. You would put your, and this sheet is for 1 crop. So maybe this is your strawberries sheet. You'd need another one for your raspberries. So you would put your income, your estimated yield in acre for that crop, and then you would put your actual yield in acre. Then you would put your estimated price, then your actual price, and then total income per acre. And down below you have all your expenses. So how many hours or how many dollars of labor did you spend on this crop? And then what your estimated, and then your actual once you look at your tax documents. How much did you spend on seed, soil amendments, fertilizer and lime applications, cover crop, weed control? How much did you spend on spray? There's also things like building rent or land rent, any repairs you had to your storage buildings or your high tunnels. Do you spend money on marketing? Do you spend money on storage? These are all things you should have a record of, but this is just a good place to combine it per crop. So you can see, oh, I spend a lot in labor on my strawberries, obviously. Okay, and then the next page is all about direct marketing. So you can skip columns 2, 3, and 4 if you're selling from an on-farm market, because you're not transporting any produce to the markets, but you should still list the amount sold. So in the left side, you put your commodity name. Next, you put your market name or location, where did you sell it? Which farmer's market did you go to, or which distributor did you sell to? How much did you take? How many bushels? How many pounds? How much did you come home with? Then how much did you sell? And then your price, and then your revenue. So this is just an easy way to keep track of. Maybe you could title this one for your county farmers market, and then have another sheet for your county grocery or whoever else you sell to. The next one is a field, high tunnel, or plot locations. This one is more based for like large fields or large acreage in a specific crop. Maybe this is not so much for you if you know the locations, but this is should have like section number, county and range, farm number, and tract number. So this is stuff you would need for applications specifically, or even tax documents. Always put an address or a closest road to these field locations in case you have to have an adjuster or an agent come out and visit. They need to be able to find your field. And then the last one is the vertical sheet, and I've chopped it up for the PowerPoint purposes. And this is a 5-year individual field activity log. And so you can do this one by field or by crop. If you do rotation, you could do this one for your field versus your crop. And then you'd also want to put your acres or your row feet so you know how much you actually had planted. And then you just fill in things like your cover crop type. This would be a good list to see, oh, 2 years ago, I had this cover crop, I'm sorry. I had this cover crop, but I didn't really like it. Or I had this cover crop a few years ago and I liked it, but I forgot what it was called. So you can go back and see which one you liked. This is also asking for things like soil amendments, soil amendment application date, and rain rate. These are all things, when you get down to the bottom, there's some pest management inputs it's asking for, and then your dates and rain rates of application. Those would be needed to prove that you did try to prevent some disease or some pests, but even though you took the needed measures, it still was not enough. And then you can prove I did have a loss due to this insect or disease. I took all the precautions, I applied sprays, but it still wasn't enough. Then you could receive a payment if that affected your yield or your revenue. And then I've got, to end it, I've got some thoughts and tips. I am very analytical thinking. I think you can never be too thorough with records. My background is in greenhouse management, specifically ornamental greenhouse management. Some of those crops in the greenhouse, you need specifically like poinsettias. I grew those for 6 years. Those are something you do, you plant about the same day every year, or at least the same week. And then 2 weeks later, you need to apply this drench. And then a month after that, you need to apply this spray. So I keep a day-to-day of what I do on crops if I apply, if I pinch. That is something that if you're new to a crop or you're new to growing, that's something you could consider, just so you can look back and say, this didn't really work. What did I do that maybe I did wrong? Or maybe I did too late. Like I said, the record keeping isn't just for tax or insurance purposes. It's for yourself becoming a better grower, increasing your yields. You may find where you've lost money, you just hadn't realized it, or you actually should be charging more for your crop because all of your inputs have increased. You just haven't noticed how much they've increased until you put it all together. So keeping, thorough records will, in the long run, save you headaches. And not every workbook or template will work for you, so make your own if you need to. I hope this is just a good starting point for everyone. Like I said, my tip is to record everything. I used to keep a yearly binder, the thickest binder you could buy in the greenhouse, and we would record everything. So any questions on the record keeping or any questions you've thought about the crop insurance presentation before? No questions? Sure, okay. And the funding acknowledgements are from the Southern Extension Risk Management Education and the USDA National Institute of Food and Agriculture. They helped fund this presentation, and then the webinar series we've been doing on crop insurance. And my name is Dakota Moore. I'm with the Kentucky Horticulture Council. There's my email if anyone has any questions they think of later. I've got business cards up here. Make sure you grab a thumb drive. It's got lots of files and videos. Everything's available on our website, but this is a nice way to have it right where you don't have to go searching for it. And feel free to take some more workbooks if you need it.